Hello and welcome to my channel. Thank you very much for being here. Today I'm going to present the definitive data-driven forecast for the Spanish real estate market in 2026. As international buyers and investors, you need clarity, not speculation. Today we will analyze the performance of 2025 and project the key metrics for 2026. Covering transaction volumes, price trends across the major coasts and cities, rental yields, and the mortgage landscape. I have analyzed the latest data and especially the extensive reports prepared by the banks and the evaluation companies like TINSA, and I can tell you that this year marks a period of consolidation and strategic opportunities, particularly along the Mediterranean coastline. Before starting, I ask you to please subscribe to my channel, hit the notification button. Your subscriptions costs nothing to you, but it helps a lot working on this channel and helping it to reach more people like you and help me bring you more content, news and information. Now let's look at the numbers. We begin with an overview for 2025. The economic context of last year was very positive. The Spanish economy demonstrated resilience, closing the year with a GDP growth at 2.9%, exceptional in Europe. The market concluded 2025 as one of the most dynamic years in recent history for Spanish real estate, characterized by high demand and a persistent shortage of supply. Transaction volumes were historic. By the end of 2025, Spain recorded well over 700,000 property transactions. However, a structural issue defined the year: a chronic lack of supply. The housing deficit reached over 130,000 units, creating a wait list culture for desirable homes. The shortage drove prices up despite a slight slowdown in sales velocity towards the end of the year. Price evolution in 2025. Nationally, housing prices closed the year with a year-on-year increase between 11 and 14%, according to TINSA and Bankinter, with some high demand regions like Murcia and the Costa seeing record-breaking surges near 30%, according to Fotocasa. Let's break this down by region. Costa del Sol, the province of Malaga, reached an all-time high with average increases of roughly 13%. In prime Marbella, prices exceeded 5,300 euros per square meter. On the Costa Blanca, we saw annual price growth between 5 and 8%. The average prices hovered between 1,800 and 2,200 per square meter, though prime areas like Benissa and Moraira traded significantly higher. The Costa Calida, the province of Murcia, this region emerged as a value leader. Premium new builds here traded at prices 30 to 40% lower than comparable properties 50 kilometers north in the province of Alicante, but still registered a very high increase in prices, making it the perfect destination for investors who are in the process of buying there or already did. Urban centers. Madrid experienced price growth exceeding the national average, while Barcelona saw single-digit growth, constrained by specific market dynamics where rental stock shifted to sales. We'll talk more about that later. Let's have a quick look at the difference between new developments and resale properties. The price discrepancy between new builds and resale properties became extreme in 2025. The nationwide average for resale properties was approximately 1,815 euros per square meter, compared to 2,712 euros per square meter for new builds, a difference of nearly 50%. If you have been watching my videos, you know the reason why, and you know how buying a new development property represents the best choice and investment. New development prices rose by 11.2% in 2025, reaching their highest level since 2007, mainly due to the scarcity of new lands and to the government not giving permissions to build more. Rentals. The rental market in 2025 faced again a supply crisis described by industry portals as a national emergency. In December 2025, rental prices in Catalonia rose by 11.5% year on year, despite all the government restrictions that in this region are the strongest. Restrictions that, as I keep reiterating, are completely useless and only make things worse. Madrid, on the other hand, saw a slight adjustment of minus 1.4%, but remained the most expensive region at 20.33 euros per square meter. Nationwide, the rental market ended 2025 with an 8.5% annual increase. The rental update index closed at 2.32%, while gross profitability for investors averaged 6.7%. Let's have a quick look at buy-to-let and law changes. The market saw a significant shift towards seasonal rentals, medium-term rentals, as a response to stricter housing law regulations on long-term contracts. The government announced now a new 100% tax bonuses for landlords who freeze long-term rents under the upcoming 2026-2030 state housing plan. But as I have been explaining in my videos about rentals, and as the numbers clearly demonstrate, all the government interventions only worsen the rental crisis created by Sanchez himself with his housing law of 2023. All the experts agree that until this law is revoked or substantially amended, the rental situation will not change. However, if you are an investor who is interested in buy-to-let operations, your rental yields will keep going up and up because of this situation. What happened with mortgage in 2025? Lending activity picked up significantly in the first half of 2025. New lending volumes jumped by nearly 20%. Fixed-rate mortgages dominated, with 2/3 of borrowers locking in rates to avoid volatility. The Euribor trended downwards throughout 2025, closing the year around 2.21%, which further increased the volume of transactions after the slowdown in 2024. Let's look now at the forecast for 2026. The economic outlook remains positive, with a forecasted GDP growth of 2.4%. The market is entering a phase of, experts call it, sophisticated stability, rather than explosive growth, making it an ideal window for investors to lock in assets before the next cycle of appreciation. We expect greater caution in the early stages of the year due to global financial uncertainty. Transaction volumes are projected to stabilize or stagnate slightly with the minus 0.3% variation, not due to a lack of demand, but due to the persisting lack of affordable supply. CBRE projects approximately 680,000 sales for the year. Price forecast for 2026. Prices will continue to rise, though the pace will normalize. For resale properties, the expected growth is 3 to 7%. The market is maturing, moving from frenzy to fundamentals. New developments will continue to outperform resales with predicted rises of 7 to 10%. International buyers are increasingly prioritizing energy efficient modern homes, which are in extremely short supply. At the national average, experts project a general price increase of between 5.3% and 7% for 2026. Let's look at the forecast by areas. The Costa del Sol remains the gold standard. Demand for luxury new developments continues to outstrip supply, with price growth exceeding national average. Expect stronger appreciation across the golden triangle of Marbella, Estepona, and Benahavis. The Costa Blanca growth will moderate, concentrating on high-value locations like Javea and Altea, while other segments will stabilize. Forecasted 5 to 9% growth, high liquidity for sea view properties, and a massive influx of Northern European and North American buyers. So a lot of UK buyers, Northern Europe buyers, US buyers who are buying more and more. The Costa Calida is the region to watch. It was the hidden gem of 2025, and after leading price growth last year, it remains the most affordable Mediterranean option with the highest potential for capital appreciation in 2026 as inventory in the north tightens. Madrid and Barcelona, high demand continues. Madrid rents are 43% above the national average, and Barcelona are 41% higher despite all the restrictions. This pressure on the urban hubs will not ease, and investors will keep buying and buying. Quick focus on investment and buy-to-let. For the international investor, the strategy for 2026 must pivot toward quality and regulatory compliance. Looking at new developments versus resale, the focus for 2026 is on energy efficiency. Future resale value will be directly linked to sustainability. Properties with aerothermal systems and passive house standards are essential. The supply of new housing is expected to grow by 10-12% in 2026, but this remains widely insufficient to cover the accumulated deficit, meaning that appreciation of new development properties will keep increasing more and more, as well as the rental appeal. And believe me, this scarcity of supply is not something that will be sorted out anytime soon. So look at medium to long term appreciation for new development properties. Looking at the rental market and law changes. The rental landscape is shifting due to regulation. Let's look at some key elements. Number one, yields. In undersupplied markets like, for example, Cartagena and Murcia, long-term rental yields are reaching 5 to 6%. Despite this, I always advise against long-term rental. You can watch the videos in my Buy to Let playlist to learn everything you need to know about rentals in Spain. However, if long-term rentals yields is 6%, medium-term rental is certainly considerably higher. Number two, regulatory risks. Be aware of stricter rules. As of April 2025, short-term rentals in apartment buildings now require a formal 2/3 majority approval from the community of owners. As I explained in my dedicated video about this, it is much easier to be allowed to do tourist rental if you buy a new development property, because of course the majority of the buyers and owners in new developments are investors like you and would vote in favor of tourist rental. Or even easier if you buy a property in a complex entirely dedicated to tourist rental. Contact me for help about all this. Number three, registration. From July 2025, mandatory registration of all short-term and seasonal rentals in a national register is in effect to curb fraud. This is done by the agency that manages your rental, but you must be aware of that. And number four, tenant selection. The market is elitizing. Landlords are prioritizing financial security with over 50 applicants competing for single listings in major hubs or more. What will happen with mortgages in 2026? The financing environment for 2026 is favorable. About the interest rates, the Euribor is on a downward trajectory. In January 2026, it opened at approximately 2.26%. Mid-year, it's expected to stabilize around 2.3%, and by the end of 2026, forecasts suggest a significant dip, potentially closing the year near 2.05%. Banks' conditions remain competitive. We are seeing fixed rate mortgages available at under 3%, around 2.5%. This creates a strategic window in the first half of 2026 for buyers to lock in financing before potential price appreciation accelerates later in the cycle. Finally, general trends and conclusions. To summarize the Spanish real estate market for 2026. 1. Supply is the driver. The shortage of inventory means prices will keep rising despite stabilizing interest rates. 2. Cash is king in luxury. In the Costa del Sol luxury sector, nearly 45% of transactions are cash-based, insulating the top end of the market from interest rate fluctuations. 3. The value gap. Investors seeking capital appreciation should look at new developments versus resale and discrepancies between the Costa Calida and its northern neighbors, or the Costa del Sol. 4. Lifestyle migration. The buyer profile has shifted. We are seeing a work from anywhere elite using the digital nomad visa, demanding high connectivity smart homes. or retirees that choose Spain as their new home, because with their pension in Spain they can live a much higher lifestyle, benefit from excellent healthcare, and from the non-lucrative visa. 2026 is not a market for speculators, it is a market for capital preservation and medium and long-term yields. I hope you have found this video interesting. If you did, please like the video, subscribe. I remain at your disposal to help you find your dream home or best investment in 2026. Contact me, everything is in the description. Thank you for watching, and I will see you in my next video.